Hi everyone, this is Mrs. Lee Chen. Welcome to my Form 4 Accounting Lesson 1. And today is 15th of February 2020, Alright, I'm going to show you what is 3-column cash book. But before we look at the cash book, we have to go back to accounting cycle that you have learned in the first term. Okay, so remember all these journal entries. After that, we do posting, and then we come to trial balance, and 4 and 5 we have the financial statements, right? Okay, so in the first step, journal entries, we always do twice. One is on debit side and one is on credit side, right? Okay, what about for a big firm, a very big company? All right, so how many transactions are there? There will be many transactions, millions of double entries. So in that case, the list for double entry will be so long. Okay, so therefore, before we do double entries, we will classify all the transactions into books of original entries. So there are 6 books for the classification. Okay, for a big company, since we have lots of double entries, so before we do debit and credit, we do classification into books of original entries, and we are going to have 6 books. Number 1, sales journal, purchases journal, and return invoice journal, return hours journal. We have the cash book, and finally general journal. Are you okay? And then after that, I need to give you examples for all this classification. For example, we make sales to customers and then we call that sales. But sometimes we receive money right away after sales, but sometimes we receive money later. Is that right? So what about cash sales? Cash sales, we go to the cash book. So for example, we make cash sales means with money received in cash book. And what about if we don't have money received? Then we don't put cash sales in cash book, and then we will put we will put credit sales, means money not yet received, in sales journal. So in the sales journal, we have credit sales. Are you okay for that? So what is meaning of credit sales again? Credit sales means after making sales to customer, we have no money received yet. So we put this in the sales journal. Okay, so what is sales journal? Sales journal is a book for recording all the credit sales. How about cash sales? Cash sales means cash received. So we put cash sales in the cash book. Cash sales in the cash book. Okay, now we come to purchases. Alright, so we buy things from supplier, so we have purchases. So what about if we have no money paid to supplier yet? And then we owe money to supplier, and then we are going to pay money to supplier later, then that would be a kind of credit purchases. So where to go? Here, purchases journal is a book for credit purchases. Okay, so what does mean credit purchases? Means no money paid yet, but we are going to pay money later. But what about if we have money paid right after purchases from supplier? So that would be cash purchases. Then what do you think? Okay, so then we will put this into the cash book, so that in the cash book we have cash purchases. Alright? Next, we come to return invoice. So return invoice is opposite to sales. Do you agree with me? If customers, they are not happy about the things purchased from us, so we allow returns invoice. So this time, we are going to pay money or receive money. If we have returns invoice, we are going to pay money back to customer. So what about if we don't pay money back? So then we put this return invoice here. So return invoice without money paid to the customers. Okay, so what about if we have money paid to customers on return invoice? Then it will be in the cash book. So return invoice with money paid. Okay, next. So what about we have return hours which is being opposite to purchases, general purchases. All right, this time after buying things, we are not happy about the things purchased from supplier, so we have return outwards. Okay, if we have money this time, if we have return outwards, we're going to have money received from supplier. If we have money received there, so it will be in the cash book. So here in the cash book, we have cash sales, cash purchases, return inwards with money paid, and return outwards with money received in the cash book. Oh, what about if we have the return outwards, however, without money received, then it will be in the return outwards journal. So here, example, we put return outwards without money received. You okay? If we have money received, of course, we will put this in the cash book. Okay, so sales journal is a book for credit sales, and purchases journal will be a book for credit purchases, and return invoice journal will be return invoices without money paid. So return hours will be return hours without money paid. If we have this return invoice with money received and money paid, then it will all go to the cash book. All right, so finally, what about general journal? Okay, so general journal, we put all the other things, they are neither in 1, 2, 3, 4, 5, and then the remaining things here. So remaining transactions, they are neither in 1 to 5, then it will be in the general journal. And in today's lesson, I'm going to explain to you what is cash book, okay? Here, we have cash book. And then we have 3-column cash book. And then now I need to explain to you. Now here is the cash book. This is a debit side, the left-hand side, debit side as usual, and credit side as usual. Okay, the right-hand side. Okay, what does it mean 3 columns? 3 columns? You see on the debit side, we have discount column, cash column, bank column. So we call that 3-column cash book. And also on the credit side, we have 1 column for discount, 1 for cash, and 1 for bank. All right, but to explain this discount and this discount to you, we need to do some revision about the things that you have learned in the first term. Okay, so here is the revision on trade discount and cash discount. Do you still remember this? Now let me give you the condition, and given you that the list price is 1,000, and trade discount 10%, cash discount 10%. So to begin with, and let's say we have buyer here, we have seller here, using this condition for revision, okay? So if we are buyer, that means we have purchases. So what about if we pay money later? If we pay money later, we will have credit purchases. So let's do some revision. Purchases always a credit item. So we debit purchases here. Okay, and credit purchases means no money paid yet. So then we owe money to whom? We owe money to creditor. Okay, and creditor is same as what? Same as trade payable. Okay, so this is the list price. Now the supplier offers us trade discount 10%, so that will be 10 after 10%, so that will be 900 here on debit side and 900 here on credit side. Okay, so you can see this 900 and 900 is already after the 10% trade discount. All right, okay, here, if we are seller, we will have credit sales. Now, what is a double entry? Sales is always a credit item, right? And since credit sales means no money received yet, so who owe us money? So that will be debtor owing us money, and debtor is same as trade receivable. Now, if we are seller, we want buyers to buy us more. So what can we do to increase the incentive for the buyer to buy us more? We can give them trade discounts, right? So the price is cheaper So that will be 900 here and 900 here. Are you okay? So therefore you can see this 900 and 900 here is already what? Already after 10% trade discounts. So you can see trade discount actually has no double entry. Okay, and we are seller, and after making credit sales, of course, we don't want to wait for a long time that the debtors to pay us money. So what can we do here? So when we have money received, so debit bank, and then credit debtor, and debtor is same as trade receivable. Look at this. This is 900, so I put 900 here, goes to debtor. Okay, so what is the incentive given to our customer? If we want them to pay us earlier, of course, we give them another discount, which is 10%. We call that cash discount. So here, another 10%. So when we receive, we don't receive 900, we receive 90%. So that will be 810, right? Okay, so this is about 90%, because this is the incentive given to the customer so that they can pay us earlier. All right, so look at this double entry. So which side is smaller? So we have this side, which is smaller, and which is $90, right? Okay, and this is what? Do you remember? This is, we call this discount allowed it. Okay, so let me highlight the new things here. Actually, this is not new thing. You have learned that in Form 4, right? Okay, so what is discount allowed? We have discount allowed to debtor if we want them to pay us earlier, and then we receive 90,000 less, right? Okay, so here, so what is discount allowed? Well, it would be a debit item in the profit and loss account as one of the expenses. Are you okay? All right, now come back to buyer. What about if we are buyer this time? Of course, if we are buyer, we want to pay less. All right, so how can we pay less? Just pay earlier. Okay, so refer to this double entry. So we pay money to creditor. So after paying money, so creditor and the liability going down, so we debit creditor, and which is same as trade payable, and then we owe 900 to supplier. Okay, so what can we do if we want to pay less? So we pay bank, so credit bank, we pay 110, right? So we pay less if we pay them earlier. So this time I add something on credit side, which is 90. What do you think? This is what? Discount received it. Okay, this is it. The revision, let me highlight discount received it. So therefore, what is discount received in the profit and loss account? As a kind of revenue. Why revenue? Because if we pay earlier, we pay less. So we have a gain to that. All right, so therefore, we have this conclusion. This cash discounts. There are two kinds of discounts. So we have the one on debit side, which is discount allowed, and which is expenses, and then we have another credit item, which is revenue, and that is discount received from supplier, and this one is discount allowed to debtor. Okay, very good. Therefore, let me go back to the 3-column cash book after revision. So you also have discount here, you also have discount here, and what do you think? Oh, let me change color to that. Okay, so what do you think? So the discount on debit side is what? Is discount allowed, always a debit item. And what about the discount on the credit side, which is discount received? Okay, so this is what we have, 3-column cash book. Okay, so and after this demonstration, I'm going to use one of the DSE questions to show you how do we do all the transaction in the cash book. Okay, now here is the question, DSE question in 2013. And then we have this question, write up a 3-column cash book, right? And now here is my 3-column cash book. Now you know what is discount on the debit side must be discount allowed, and discount on credit side is discount received. Okay, are you ready? So here, So I have this highlighted. So this is the opening balance. We have cash, and then we have bank overdraft. Now be careful about this, huh? So we start with this 1st January, so dates 2013. So I put 1st January. So the opening balance is balance brought down. I have nothing in discounts. I have nothing in bank. However, how much is it? 12,600. So 12,680. And be careful about this bank overdraft. It means that we have a credit balance in the bank account, and which is negative, and which is current liability. Remember this? So therefore, this is credit side, and which is negative. So I have 30,980, and the date is 1st of January. Balance brought down to begin with. Okay, all right. And here you have the Impress system, and don't worry about that. This is already out of syllabus. Okay, now keep going. Now we come to 2nd of January. So whenever we have complicated thing, just slow down and analyze step by step here. Okay. All right, so here, this page is my analysis. So 2nd of January, excuse me. Okay, so whenever we have complicated thing, we slow it down and do it step by step, right? So now I have my double entry. So receive a check from customer, so therefore debit bank. All right, and who is the customer? The customer is same as trade receivable, and which is loan. Okay, and then who was given a cash discount of 2.5%. So that means when we receive this, so what is 100% minus 2.2? Let me get my calculator. Okay, so 100 minus 2.5. So 100 minus 2.5. Oh, that will be 97.5%, and this is 100%. Therefore, you can see debit side is smaller, so we debit this 2.5%. Remember, what is this? Debit item, so which is discount allowed from trade receivable or debtors. Okay, now let me put the figure here to settle his account. So his account is 150,000, right? Okay, so use calculator. 150,000 times 0.975. Oops. So that would be 164,250, and the remaining will be 150,000 times 2.5, so 2.5 will be 0.25. Okay, so I have 3,750. Okay, so this is double entry. We do it step by step. Now we come to posting. So here is the cash book, right? And just now I have this. So debit bank. So here debit bank, this is debit side. I put 146,250. Okay, and there is 3,750 for discount allowed there, and the date happened on 2nd of January because of trade receivable, and what is the name? Loan. Done. This is it. So I have made transaction on on 2nd of January. Okay, done. Okay, the second one. Pay a 20% deposit by check. Oh, this is a very, very special transaction. So let me give you a highlight to that and explain to you step by step. Okay, so the treatment will be we pay 20% deposit by check for buying motor vehicle. So since we pay by check, we credit bank. Now, the point is, when should we debit motor vehicle? So we debit motor vehicle when we have motor vehicle received. So since we don't have motor vehicle received yet, so that we cannot debit motor vehicle, so therefore what do we debit? We debit deposits instead, and which is 20%. 20%. Okay, I'm going to show you and explain to you later. So therefore, at this point, we don't, the amount we pay is not 200,000 because we don't pay the full amount. We only pay 20%. So what is 20% of that? That will be 40,000. That is 20%. So the deposit is 40,000 as well. Okay, so when are we going to debit motor van? That is when we have motor van received. So later on, let me show you the double entry. Later on, after we have motor van received it, so we debit motor van, and now the cost is 200,000. Okay, we still need to pay money later on. Why? Because we don't pay enough before. We only pay 20%. So here, do we need to pay 20% after we receive? No. Do we need to pay 100%? No. We only need to pay the remaining parts. We owed it to the supplier. So how much is the difference? So that would be 160,000. Okay. And why we put only 80%? And don't forget, because there is the deposits here. And which side is smaller here? Which side is smaller? The credit side is smaller, and which is smaller by 20%. And obviously, this deposit, okay, will settle the deposit we have created before, and which is 40,000. Okay, so this is a very new thing we learned here, transaction, a very special thing. So you can give me a highlight here and learn this by heart. So when are we going to debit motor van? Only when we have motor van received it. And what about if we don't have motor van received it? We create a deposit on debit side. So this is a new thing we learned. Okay, all right. Okay, so after this double entry on 5th of January, a debit deposit, so we don't need to draw up any T account for deposit, but this is 3-column cash book, so I have the credit bank here. So credit side, here 40,000, nothing in cash column, nothing in discount column, and the date is 5th of January. Reason, deposits only. Okay, not yet the motor van. Okay, right. Okay, so therefore we have done all the posting related to 2nd January, 5th January. Now we come to 7th. Receive a check. So debit bank, receive a check because we have more money in the bank. So, okay, so this is much a straightforward one. From Hillary Company as commission for work done. So the date is, oh, I should match the place here. So 7th January, so it should go to, now if you match the place, it should be this one and this one. So that will be why receive money, because this is commission. Received it. Okay. All right, so next. Cash amounting to this from sales was deposited into the bank directly. Okay, what do you think? We pay money or receive money here? After sales, we receive money. And where is the money now? In the bank account. So here, in the bank account, we debit bank, so 8,790. Okay, so the date is 14th of January. So reason, which is sales. Like this. So this is how we are going to record the transactions in the 3-column cash book. Okay, keep going. So 14th and 17th, David withdrew 3,200 from the cash box to pay for his son's school fees. Oh, who is David? David is here. So David is the owner. So according to business entity concept, okay, owner can draw things from the business. So therefore, cash box, more cash or less cash in the business? Less cash. So we credit cash here, credit side, by 3,200, nothing here, and the date is 17th. First, this is drawings. Okay, all right, so next, pay the balance of the motor van purchased on 5th January by check. Oh, what is this? Okay, let's give me another highlight to this point, because this point is exactly same as this point I have mentioned. Okay, so pay, see, pay the remaining when we have the motor van received it. So the transaction for this will be on 19th of January. So what is the transaction and the posting? So I need to credit bank this much, credit bank. So 160,000 here. And the date on 19th of January. And the reason is motor van. Okay, this is it. Okay, so therefore we have done the special thing on 5th and 19th in this question. Okay, now we come to the transaction on 24th. So on 24th, we have this. Settle Cam Key's account 35 by check. So that means we have to pay money to settle the amount we owe to Cam Key. So credit bank. All right, so and who is Cam Key? Cam Key is creditor, and creditor same as trade payable. And now I have Cam Key here. So since we have a cash discount here, when we pay, we don't need to pay 100%. We pay less than 3%, so that would be 97%. And credit 3%. What do you think? Discount? What? Discount received on credit side. So we owe Cam Key 35,000. We only pay 97%, so 35,000 times 0.97. So the answer is 33,950, and this 3% will be 1,050. Okay, so right after you get the double entry, you can do the posting, and that will be easier for you to do the posting. Okay, now here, step by step, do the posting. So that will be credit bank. So here is credit side for the bank accounts. So 33,950, and discount received at 1,050, and the date is 24th of January. Okay, reason trade payable, and which is Cam Key. Done. All right, so next we come to 28th of January. So withdrew 9,000 from bank and put the money in the cash box for business use. So now be careful, is this drawing or not drawing? Now since this is for business use, not for private use, so this is not drawings. Okay, so what will be the double entry? Let me show you step by step here. So the date here is 28th January. Okay, withdrew from the bank, therefore we have less money in the bank, so credit bank, and which is 9,000. Okay, so in the cash box, so therefore we have more cash, so debit cash 9,000. All right, now we come to posting. So debit cash 9,000, so this is cash debit side, so I put 9,000 here. Okay, and the date is 28th of January. What makes you debit cash? Because of bank. So the reason here, bank. All right, now the posting. Okay, so debit cash and credit bank. So here, 9,000 credit side. The date is 28th of January because of cash. All right, so now be very careful about this posting. You can see this posting, actually we have a name to that. We call that Contra Entry. Okay, you can refer to your textbook about Contra Entry. It means the same transaction being recorded in the cash book. See, debit cash and credit bank. So this is called Contra Entry. Okay, all right, so we almost finished. Okay, 30th, pay wages in cash and 20,000 by check. So after paying wages, we have less cash, so credit cash. My cash is here, so 10,000. And what else? And 20,000 by check. Okay, and the date is 30th of January. Why we pay cash and pay check? Because of wages. Okay, and finally, look at this petty cash. No need to worry about that. That's because it is out of syllabus. So I just copy this out of syllabus thing. You just copy in order to make everything neatly and nicely. Are you okay? So we're finished. Actually, we're finished. So how do we close the cash column and the bank column? As usual, we always put larger figure here at the bottom, and then we insert on smaller side. So cash account, so 6,685. If you use calculator to check, this is closing balance. And then the bank as well, this is the closing balance in the bank account. Oh, but what about discount and discount here? Are they related? Actually, they are not related. This is what? This is the total amounts. So this is, can you see? Okay, let me move up. This is total amounts for discount allowed at 3,750, and this is what? This is total amounts for discount received. Since they are not related, so we do this differently from the treatment of cash and bank account. Okay, so this is today's lesson 3 column cash book. All right, and thanks for watching my video, and see you next time. Bye bye.